Welcome to the Real Estate Forum, a podcast from the Paul Milstein Center for Real Estate at Columbia Business School. I'm your host, Raphael Sidelsky. This is your place for key insights into the evolving real estate landscape, from candid conversations with real estate thought leaders, including the esteemed faculty of the MBA Real Estate program, to cutting-edge research from the Milstein Center's Research Lab. Let's dive in. My guest today is Jonah Sonnenborn, head of real estate at Access Industries, the global industrial and investment group founded by Sir Len Blavatnik. Jonah oversees a diversified, opportunistic real estate portfolio that spans the globe, from mixed-use urban developments to luxury hospitality assets and landmark towers. Access Industries has built a $60 billion global portfolio in over 100 countries, across strategic equity, media, entertainment, technology, real estate, and biotechnology. In real estate, notable projects include the Faena District, Miami Beach, Faena Hotel Buenos Aires, One High Line in New York, and the Grand Hotel du Cap Ferrat in France. Jonah joined Access in 2013 and has since built a platform synonymous with one-of-a-kind real estate, bold assets that combine architecture, culture, and long-term vision. Prior to Access, he was with Dune Real Estate Partners and began his career in investment banking at Goldman Sachs and Morgan Stanley. He holds a JD and MBA degrees from Columbia and a BA from Dartmouth College. Jonah, welcome to the show.
Thank you, Raphael. I've really enjoyed listening to your show, learning from my industry colleagues, and I'm excited to be here with you today.
Thank you again. You studied English and government at Dartmouth, not the most obvious launchpad for a career in global real estate. Tell us about how that foundation shaped your thinking and how you moved from investment banking into the principal side of the business and ultimately to your current position.
Fair enough. I wasn't a business undergraduate. However, I was fortunate to go to a strong liberal arts school before heading into investment banking. Those courses provided me, I think, with a broad-based education of practical skills, which emphasized to me how to think critically, communicate, and problem solve. While I might not have known then that I was going to run a global real estate business when I grew up, it did prepare me to be adaptable and handle complex situations. I think it also really deepened my curiosity, appreciation for culture and the arts. So in retrospect, I think it prepared me pretty well to succeed in what I now do every day. Initially in banking at Morgan Stanley, I was the sole analyst focused on real estate M&A work. I was looking at the time to get reps in and being exposed to as much activity and people as possible. But pulling all-nighters and making pitch books wasn't a great experience. And so I moved over to Goldman Sachs to finish out my investment banking career. The move was the right one for me at the time because I went from seeing limited deal flow to seeing lots of deals and executing on them. My time in investment banking really not only provided me with an excellent foundational education, but also really confirmed to me that after law and business school that I wanted to be on the buy side. And after graduate school, I joined at the time what was a startup opportunistic special situation fund founded by 3 former Goldman Sachs partners, which ultimately became Dune Capital. And taking that, early entrepreneurial leap of faith really gave me great exposure to deal flow. And it taught me some things I really loved about investing and some things I didn't really love about the format I was investing in.
Turning to Access, Len Blavatnik is not only known for his hugely successful contrarian global investments across industries, but also for his remarkable philanthropy in science, the arts, and higher education. He's a true polymath, a global citizen. He holds a master's in computer science from Columbia, an MBA from Harvard, and he's been recognized as both a knight by Queen Elizabeth II and a chevalier of the French Légion d'honneur. Before we get into real estate, tell us a bit about Len himself and the broader Access platform.
As you say, Raphael, Len is tremendous. His intuition, his breadth and capacity are truly unparalleled. He has great curiosity and drive for growth, and his drive for growth and success are truly boundless. When you look at his track record across decades and multiple industries, It really, in my opinion, goes without saying he's one of the most accomplished investors of all time. Fortunately for me, he has a special place in his heart for real estate. When he was at the earliest stages of his career, living in New York, he bought and sold apartments. And, it created a lifelong interest and appreciation for the sector that has obviously grown and expanded to identify more scalable commercial opportunities later in his life. Access Industries is his investment vehicle, which is uniquely structured in terms of scale and permanent go anywhere capital. He and our CEO, Lincoln Benet, have taken a very hands-on and personal approach to building our team, which is very lean around best athletes. And I'm very proud of all my partners and teammates who I have the privilege to work with. Across each of our 5 disciplines, which are technology, biotech, real estate, strategic equity, and media entertainment, our team thinks about how to maximize return based on our differentiated capital. Whether size, speed, or complexity, we're always looking to win and generate compounded returns.
Are there any other examples of how his leadership and influence has informed the way you think about risk and your real estate portfolio?
His breadth of knowledge and connectivity across a myriad of businesses is special. And he really has a deep appreciation for understanding people and what drives them in business. And learning from him has been eye-opening in that regard. And in particular, I've been inspired by Len's contrarian investments. It is super challenging, as we all know, to do what is opposite of doing the opposite of what is popular. However, investing is not a popularity contest, and we often look to be contrarian or for elements of distress in our real estate investments. In addition, Len has always taken a very hands-on approach to his investments. He's very engaged and active, and you can see that firsthand with how he drives results and also makes sure to structure against the downside. That influence really has resonated with my conviction that buying or creating irreplaceable properties, particularly those where you can place make, is one of the best ways to generate alpha in real estate investing. Hands-off financial engineering aspects of real estate don't really excite me at the end of the day. Instead, it's more the roll up your sleeves work in the trenches that draws on a broad range of expertise to create something new and valuable. This not only mitigates risks, but takes long-term vision and an entrepreneurial mandate, which is afforded to me by Access's permanent capital.
When you joined in 2013, what was the vision then for building out real estate, the real estate platform, and how has it evolved since?
That's a great question. When I joined, it was at the time we were coming out of the GFC, and I had developed a pretty strong workout and restructuring work muscle at my old firm. Initially, this experience gave me the skills to successfully restructure and reposition the existing real estate portfolio at Access, which was my initial mandate when I joined it. One of the, key investments I came in to jumpstart was Faena Miami, which I know we're going to get to later on. After repositioning that portfolio and building trust with Len, I leveraged many of those same sort of fix-it skills that gave me the experience to build a broader platform by identifying value in undermanaged and underinvested in assets. Turnaround investments today have really become the foundation of the platform that we have at Access.
Let's go through some of the case studies, and starting with Faena District, Miami Beach. That's a partnership with the visionary hotelier Alan Faena, and it's a place where you merged art, architecture, and urban revitalization. Tell us more about that signature project.
Sure. I really love talking about Faena Miami because it is a telltale story of Len's incredible long-term vision. Len combines the power of place and relationships to envision what is today the Faena District with his close friend and partner, Alan Faena. Len met Alan in the early 2000s in Argentina and saw Alan's unique ability to placemake. Alan had redefined Puerto Madero, an industrial area that had become the symbol of urban revitalization in Buenos Aires. At its center was the Faena Hotel, designed by Philippe Starck, which brought together a visit and play environment that brought together art, architecture, music, and art. Years later, Len owned the Miami Saxony Beach Hotel and Residences, originally slated to be another brand. By 2013, Len was looking to do something special that would revitalize 2 contiguous blocks of central Miami Beach, which at that point was quite run down. Together, Alan and Len envisioned a new sort of cultural mecca, if you will, inspired by the Faena in Buenos Aires. They both saw how this real estate location could be something more via placemaking. The very conscientious emphasis on design creates spaces that are not only beautiful, but highly functional so that they became meaningful destinations for people, encouraging sort of social interaction and creating real economic value. This inspired placemaking created around-the-clock activity, making the real estate more attractive to our customers and tenants and leading to increased demand and value ultimately to access. Having had seen this at the Standard Hotel with Andre Balazs earlier in my career, I was a quick believer in Len and Alan's vision and have enjoyed being a part of the magic ever since.
Let's move to Manhattan and talk about a more recent project, One High Line, a huge mixed-use project that you acquired and reimagined after it stalled under a prior developer. Tell us about the turnaround story and how you approached this complex repositioning.
So this is a great story about how our capital can really play and see through a long-term vision. We had originally seen this property, which was a parking lot, in 2015 when the whole city block came up for sale, owned by a family. Coincidentally, like the Standard Hotel, which I'd worked on earlier in my career, it's located on the High Line. We thought, we would bid aggressively and bid about $500 million to hopefully win the deal. Shockingly, we came in a distant second to the winning bidder at $892 million, a record price for land at the time. The developer commenced construction, and by early 2020, we believe approximately $2.7 billion had been spent on the property. COVID subsequently hit, construction halted with a project that was 75%, give or take, built. The lenders commenced foreclosure, and in 2021, we partnered with a New York developer to ultimately take over the project. It really shows to me that timing is everything, which is why the nature of your capital base is critical. While it was a pre-packed bankruptcy, this irreplaceable asset was only really temporarily a casualty of underinvestment. And, we were fortunate to take care of this liquidity-starved sponsor to really purchase the project at 33 cents on the dollar. We ultimately began to placemake at this one-of-a-kind property, finishing the 236 condos, adding a 120-key hotel, which is now the Faena. And, by bringing in Faena as an operator of this irreplaceable hotel, we continue to expand one of our own platforms and build enterprise value.
And speaking about turnarounds and coming in through the debt, let's talk a little bit about the Ocean Club on Paradise Island in the Bahamas.
Yeah, that was one of the first transactions I invested in here at Access. A lender had taken control of the super resort Atlantis on Paradise Island, and along with that came a little jewel box hotel, 107 keys, that was the Ocean Club. And we were approached to invest as mezzanine financing in a recap of the entire resort. And I said to the lender, I that's not really the business that we're in terms of providing financing, but I'd really love to own the Ocean Club. So we haggled a little bit. And at the end of the day, in a debt for equity swap, we were able to procure the one and only Ocean Club at that time. And eventually, through some negotiation, Four Seasons has come in and now manages that property for us. And we've taken it from making the net operating income that it was doing back in 2015 and tripling it to what it's doing 10 years later.
Access also owns the Grand Hotel du Cap Ferrat in the French Riviera, a legendary property with a deep heritage. Tell us a little bit about that one and more about this philosophy in acquiring these one-of-a-kind assets. Is there a common thread that links them all? How do you think about that?
Yeah, I love the the phrase "one of a kind asset," because to us, that's a lot of what our business is about. It's about creating special properties or owning special properties that one would really love to own forever. Um, the Grand Hotel Cap Ferrat was acquired by Len prior to my joining Access, in a distressed purchase of three properties, one in Paris, one in Megève, and one in Cap Ferrat Saint-Jean, where he purchased these three hotels. The Grand Hotel is a magnificent 74 key hotel right on the Mediterranean. When I first joined Access, it was what I would say an underperforming property. Still beautiful, but it wasn't producing the type of financial return that I thought was deserving of the property. When I approach an investment, I'm always looking at what we can do better. How can we fix it, improve it, have it operate better? And the Grand Hotel was a perfect example of that. In fact, at the time, it was even losing a little bit of money. Um, and we brought in new management. We brought in a new team from on our side to asset manage the property. We added a kids club that would attract children and families, create generational memories. And today it is one of the highest performing assets in Four Seasons portfolio.
How do you balance these trophy scale investments, these one of a kind assets, with more recurring platform plays, whether that's hospitality brands, mixed use operators, or the other, real estate investments you do?
Sure, it's a balancing act, as you point out. Trophy assets with scale are not for the faint of heart, and you need time on your side. They take a lot of resources, and as I mentioned, time, which is why Access is uniquely positioned to take them on versus other capital sources, such as a traditional fund or institutional investor. But at the same time, as you point out, we aim to be selective and diversified. We balance these large scale single asset investments that often have tremendous capital appreciation with platform investments and trading properties that generate current cash flow for Access. Over time, our successful recurring partnerships have allowed us to scale meaningfully into sectors, and it allows us to slow down or control investments if we see a potential unfavorable supply-demand imbalance that will harm asset value or pricing power.
Do you view your portfolio as this collection of individual assets or as an ecosystem of brands and experiences that are interconnected across the markets?
Taken as a whole, I'd say that real estate has a large diversification value for Access. And there's really a great amount of connectivity within the portfolio. However, I think one of our greatest superpowers is the interconnectivity across the firm. One benefit of the Access ecosystem is that all of our businesses have the potential to work with one another across sectors and markets, not just real estate. My strategic equity partner has insights into power. My tech partner has views on chips and data centers. My biotech partner has opinions on the rise and fall of biotech startups. And my entertainment and media partner takes positions on studio content production. These valuable perspectives inform my team's approach across potential sectors in real estate we may want to invest into: data centers, life sciences, studios. And so I think that makes us a much better and informed investor.
You've built a business around long-term value in an industry that's often driven by short-term metrics. How do you navigate periods like today with higher rates, limited transactions, and uncertain values?
Yeah, we make investments that really avail us to be flexible. We're long-term value investors, but when the time comes, as it did in 2021 and 2022, to exit positions because people were paying 2 and 3 caps for multifamily properties and industrial assets that we owned, we're more than happy to exit. And now with, challenging capital markets, funds with liquidity issues, fewer investors making moves, we drive alpha at the properties and wait for sunnier times to exit, content to generate cash flow in the meantime.
The theme across your portfolio is that architecture and culture aren't simply decoration, they're central to value creation. How do you work with designers and creative partners to express a place's identity through real estate?
I'm a strong believer in placemaking to distinguish real estate and create asset and enterprise value. Our team takes a very, very active role in this regard in choosing architects and creative partners alongside our chosen developers and operating partners. And even with top developers, we're often the ones at Access responsible for bringing the chosen designer or creative partner to the project through a charrette process. We're also often instrumental in choosing brands and operators for our hotels, which we think is essential to drive the right authentic feel. And that brings people to want to come and then stay again.
You lead a lean team that oversees this global diversified portfolio. What's your approach to team building and managing these investments?
Yeah, I'm fortunate. I have a wonderful team that work with me at Access, and this is from acquisitions to asset management, legal, finance, and accounting. When you are a direct real estate investor who takes a hands-on approach to managing your assets, it's essential, in my opinion, to be cradle to grave. Seeing the investment from inception through conclusion, with all the steps in between, is crucial to learning, understanding, and properly managing how to maximize results. Across the board, we're a pretty lean team. So we look for critical thinkers who can take a proactive approach to solve complex issues, to grow as we grow, that we can continue to handle diverse investments across a wide range of properties and markets.
What do you look for in your operating partners when you choose who to back?
Well, that's a great question. Track record, competence, experience, and really a record of making good decisions. As they say, a good partner can make a bad project good, and a bad partner can make a good project bad. There really may not be a more important decision to make than picking an operating partner or development partner. We obviously look for integrity and people who are best in class. But I also think we look at the leadership of our partner, the corporate culture, their governance, and their creativity. We can often choose between two or more options. So looking for areas of distinction or difference are often help us make that decision.
What's next for Access Industries' real estate platform? Are there any emerging markets, asset types, partnership models that you find particularly compelling as you look to the next decade?
People always ask us for our wish list. What do you want to do? Where do you want to be? Who do you want to be investing with? I only wish the answers were so easy. We are truly opportunistic and want to find the best risk-adjusted investments for our capital. I find that strategy drift and being a tourist in markets is a real risk and generally unnecessary given our capital and our business model.
Is there any kind of new definition you think about in terms of what one-of-a-kind real estate will mean to you as you go forward? Or is it, more of the same or similar types of deals that you've done?
We've been thinking a lot about this precise question of late, and the easy answer is it's real estate you'd never want to sell. And I guess you'd call it forever real estate. Some people may say it's a leased data center to a hyperscaler with excellent credit. Others may want a great retail corner in a major urban market that's sort of forever main and main. We try not to pigeonhole ourselves, but our capital is unique in terms of large scale special development and placemaking capability. So, with travel at a premium, I expect unique and exclusive luxury destinations and special locations and stories to become ever more in demand and, garner even more pricing power. I think irreplaceable and irreplicable real estate that can be held on for a long time, compounding until you have no economic basis, is the gift that keeps on giving and is truly the ultimate jackpot in real estate investing.
Jonah, you earned your JD and MBA here at Columbia and remain an active alumnus. How did your time at Columbia influence your career and approach to global real estate?
In addition to meeting great people like yourself, I used graduate school to really figure out what I wanted to do with my professional career. And my dual degree allowed me to test drive a number of paths from law to business. And the highlight is that I have a lot of friends from both schools who have gone on to have really impactful careers. Two classes really stick out for me. First, I took a bankruptcy and restructuring class with Harvey Miller. It was a law school class, but Harvey, who had bailed out New York City in the 70s, Enron in the 90s, and Global Crossing in the dot-com era, really taught me about working through complex situations and became an inspiration every time I find myself problem solving. Second, I took a class in the business school with Jeff Barkley in real estate investing. The class was a series of case studies, and he brought in speakers to walk us through the latest ideas and investments in the sector. I found the stories and characters truly inspiring and, wanted to have the same type of professional experience. And, I've always been a big believer in giving back to the institutions that made me who I am today. And I'm fortunate to be actively involved at Columbia Business School as a member of the Helburn Center for Graham and Dodd Investing. My partner at Access, Kristen Gilbertson, teaches a class at the school about family offices, and I'm fortunate to teach a section of the class on investing in real estate. So it's great to be back up on campus spending time with students.
Before we wrap up, I would like to ask you for a personal recommendation outside of real estate. A book, a habit, a trip, philosophy, or life lesson that's been meaningful to you?
Yeah, it's a really great question. I love that you ask it. I've been really fortunate to be in business where we have so many great opportunities to see the world, travel, meet interesting people, and deepen relationships. So I'm going to focus on two recent books that embrace the idea, in my opinion, of human engagement, enlightenment, and relationships. To give some context as to why I'm interested in this area, I had a great professor by the name of Roger Masters who taught me political philosophy. With Masters, I studied Locke, Hobbes, and Rousseau and delved really deep into their somewhat differing views on the modern idea of the social contract. Every few years, I pick up their treatises to reflect on their classic texts. And I often think about those values governing human interactions imbued in those doctrines, in particular Locke's ideas of natural rights, life, liberty, and property. And more recently, I've read and recommend to you now two modern philosophical novels by Richard Powers. The first is The Overstory, which is a fabulous story about human interconnectedness and nature. And a second novel, which was published last year, is The Playground. It's very topical because it explores human values and rights in relationships to technology and artificial intelligence. So from Locke to Powers, I think about these, sort of philosophical principles and how they connect in my everyday life. And in terms of setting standards for how I conduct business and choose to live in society.
Thank you so much for such a thoughtful answer. I look forward to reading those two books and revisiting some Locke as well. That was phenomenal. Well, Jonah, thank you so much for joining us on the Real Estate Forum. Your career and portfolio show that exceptional real estate requires both vision and conviction, and that the best assets are those that define their place in the world.
Thanks, Raphael. It's really been an honor to spend this time with you, thoughtfully discussing a business and topics we both love. Really appreciate it.
Thank you for listening to the Real Estate Forum, a podcast brought to you by the Paul Milstein Center for Real Estate at Columbia Business School. Be sure to subscribe for more insights from real estate thought leaders, industry professionals, faculty, and the latest research and expertise from the Milstein Center's Research Lab at Columbia Business School. If you've enjoyed the episode, please follow, rate, and share the podcast. You can keep up to date with the Paul Milstein Center for Real Estate at business.columbia.edu/real estate. Thanks again for joining us, and we will see you next time.